Welcome to Inform TV. I'm Alan Repke, Alexandria, Minnesota. Today, this 26th day of October 2013, we're going to look at the Farm Bill Conference Committee coming up from a standpoint of crop insurance and these subsidies, how lucrative they've become for our farmers and why our farm state congressmen and senators are fighting to see that they protect crop insurance and take care of our poor, lonely farmers that got balance sheets that'll just blow you away and just mind-boggling income the last few years. But anyway, and to look at that, we've got to look at crop insurance, and we're going to look at Subsidies 101, where when you add one with one, the crop insurance subsidy plus the direct payment subsidy, you get about zero as far as costs to get incredible insurance. It makes Min-Shear, Obama insurance just look like, I mean, just mind-boggling costly compared to what we've been doing for our farmers. And we want to bring that out. The other thing on this conference committee, you got to see why Congress gets nothing done. We've got the House and the Senate coming together on their two versions of the Farm Bill, and a number of universities saying they're really not a whole lot of difference. And I, a guy that farmed for 30 years and actively involved in the only farm policy that worked was sugar policy, and that's got rotten as well. We're going to try to do a segment on that yet today. The House brings this whole army of people in compared to the senators, instead of each of them bringing 5 people in that actually know what's going on, or each of them bringing 10 at the most, and I think they got about twice that. In fact, 5 would probably be more than enough if we actually had leadership, and a board of directors of 10. In other words, let's iron out the differences and let's get things going. But unfortunately, we don't have that. But in this whole process, you have to wonder, Congress is saying over 10 years they're going to save the taxpayer about $23 billion. And the numbers are so bogus on this whole thing. And for our farmers who are out there listening, this farm bill does not protect you in any manner, shape, or form. Crop insurance does, provided you always start with a good price in February, your December futures. But if you don't start there, this farm bill, as well as your crop insurance, are really worthless, and we have loan rates against their inventory people. There's no support mechanism here. It just shows how incompetent the farmer is and his corrupt congressman, and relying on the greed of the past and all this type of thing. It's a disaster, just like everything else, and that's why we're talking. But we're going to be talking about this today in relationship of what they're insuring per acre relating to you as a wage earner. We know most of the audience that listen to Inform TV, especially you guys in the Twin Cities now, are what? You're wage earners. And we're going to show you how incredible this revenue insurance, which is at least 75% of this coverage today, it's just mind-bogglingly good. And unfortunately, no matter what I tell you today, there's 2/3 more I should have said. But I think you'll all pick up on the fact, and being we loop, you can listen to it again. But anyway, the people in St. Paul at the USDA sent me a letter that said this year, or in 2012, our Minnesota farmers received in these direct payments $291 million, almost $300 million. Yet at the same time, and this is for 2012 crop, and at the same time, they received $513 million in crop insurance subsidies. People, so we're talking on the 2012 crop, $800 million, almost $1 billion of subsidies that one would, the direct payment subsidies that have come for the last 18 years, whether prices were low or high, or they had good yields or poor yields, they just came in the mail by the end of October. In fact, till just the last couple years, they used to get half when they signed up the fall before. But anyway, the interesting thing, what I'm trying to bring up to you today on 101, is you take crop insurance subsidies and these direct payments, and the way the things are lining up, the stars are lining up perfect for the farmer, but at the same time, if you keep Informed TV on the air and find some advertisers for me as I move to St. Cloud and keep expanding this signal, you find that it's a great time to show the taxpayer how these farm state congressmen and senators have just showered these farmers with blessed insurance, mind-boggling insurance. As we just went through in 2008, $800 million of the two subsidies. And then we're going to show you how that affects their actual cost. It's about zero. But in fact, in Iowa in 2012, they actually made a few bucks when they after paying their crop insurance premium. When they took their direct payments and a combination of their crop insurance premium, their cost was even better than zero. Here's some of the numbers we wanted you to look at, and bear in mind there are a lot of numbers, but this year, due to the sequester cut, the direct payments that they're in the process of sending out right now, mainly by wire transfer, I presume, are $250 million. So this year, the crop insurance subsidy for just for our Minnesota farmers, people, is $500 million, plus they're getting another $250 million for direct payments. And so what happens when that happens? Their direct payment is about $14.25 an acre. Yet their out-of-pocket payment that's due now for their crop insurance the end of October is $18.25 an acre against insured acres, using insured acres as the acre base, and that's the only way you can bring relevance into this whole process, especially for corn and soybean farmers. And so their cost per acre, when they let the one subsidy here and one come together in an arc, their cost will be about $4 per acre. Just think of that, people, to have $584 an acre on all the crops. You take all the crops in Minnesota, $4, they still have $580 worth of protection. Mind-boggling, people. And the other thing I want you to understand here is, I've always said here on Informed TV, is that farm policy is the easiest way to understand your government. When people in Congress, Klobuchar, Franken, Walz, Colin Peterson, Grassley, Robertson, Kansas, doesn't matter, they're Republicans and Democrats, there's no cockeyed difference. They're all working for the elitists, the special interests, the money people, plain and simple, and this is what this is showing here. But here's what I'm getting at. For you people that are either retirees or a wage earner out there, insurance of protecting that crop at $584 per acre. What if we simply do for you, the wage earner, look at that on a weekly basis? You take home a gross check of $584 per week. Times 52 weeks, your annual income would be $30,368. Pretty common in Minnesota, and especially outstate Minnesota. In fact, a lot of people say on 40-hour week, I can't make that much, but it's a good reference point of $30,000. And you'll say, well, what about the insurance portion of it? Would you not give $4 per week to be guaranteed if your factory closed down and we're moving down to St. Cloud, for example, when that paper plant blew up, caught fire, whatever, and other businesses have been hit by tornadoes and that type of thing. If you, the wager, suddenly your business was gone, and you would say, well, how am I going to live now? Well, you got the equivalent of crop insurance. So you're going to continue to get $584 per week in gross income. You're going to continue to have your $30,368. And as long as you have a subsidy over here and a subsidy over here, like our farmers have been enjoying for the last 3 years and probably more than that, your out-of-the-pocket cost will be $4 a week. And you'll say, well, that's still $207 a year, Alan, and gee, I don't want to give that. But remember, the remaining part that comes out of their pocket after these subsidies for them is tax deductible. What if we'd give you that as a tax deductible item like we give our farmers? What's your true cost? Nothing. Just think of that. And that's how this thing works. And the other thing, there's no limitations. I've talked here in Inform TV. There's one farming operation, one farmer himself, and no kids as far as I'm aware of, or even a wife at this point. He farms the equivalent of Itasca State Park. And if he takes insurance on the basis of what the average Minnesotan does, and I see no reason why he wouldn't, or there's other farming operations that may have a couple sons or something involved, he likely received $1 million per year for the last 3 years in crop insurance subsidy so he could farm 35,000 plus acres. Just think of that, people. And yet our Congress in this cockeyed committee say, well, we've addressed that issue. Instead of these big operations that have, I think, what are they talking, 750,000 of adjusted gross income, they're only going to get 47% of their premium. But see, it's a confusing and tricky word, the way politicians are, or the way political parties are. The farmer is getting about 60 to 62% of his premium paid for by you, the taxpayer, right now. And we can't look at these numbers. I tried to go to the Wilmer office and look at this particular farming operation, and they refused, because our congressmen, your senators, your congressmen put it in the bill that we can't look at what these guys are getting for crop insurance premiums. Like many of you went to EWG.org and looked at their other subsidies for the last 18 years. Mind-boggling numbers on certain years. But what I'm getting at in this whole process here, do you get treated that way? Of course you don't. And why should these farmers enjoying the best of times, mind-boggling income? And we're going to give you another little example on the same thing. In 2012, that Minnesota farmer insured his crop for $574 per acre. And his out-of-pocket costs, once again, we took his crop insurance premium and then his direct payment subsidies, his out-of-pocket cost was $1.12 per acre. So if you took as a wage earner, you had to invest $1.12 per acre to guarantee basically your $30,000, $1.12 per week in your case, to guarantee your $30,000 a year income. Your cost in this endeavor would be $58. Just think, wouldn't it be easy to get your employer to say, I want to make sure all my employees get $30,000, and all I got to do is go to Amy Klobuchar and Al Franken and Colin Peterson, Walls, or drive down to talk to them big Republicans down there, Grassley or Roberts down in Kansas, and we'll cut a little deal, and we'll put all these smoke and mirrors in here, and one will call insurance, and one will say is they needed to pay expenses, and of course they'll say this is not a fair comparison. It's the only way to look at it, because why? If Congress for the last 18 years have given these farmers here in Minnesota about this $17 to $18 an acre, what would your first dollar go to? You know, the counting rules and stuff, some of you are aware of the fact, you'd always pay what? The first $18 you would pay to make sure your income's guaranteed, wouldn't you? Of course you would. And then better yet, if you had Uncle Sam paying for it, just think of this, people. It is mind-boggling. Yet at the same point in time, we're going to look a little on a national basis here as well. But I think Iowa's even a little more interesting, and government is set up just to confuse everybody, and I don't want you to confuse on this, but I'm looping it so you can see it a number of times of how these farmers are able to guarantee themselves a family living, cover all their expenses, pay all their debts, and actually show a profit in here and actually build working capital by government subsidized crop insurance. And they've been doing it for the last 3 years. And it's going on, and now our congressmen and senators, we've got to have a farm bill. The president comes back, we have to have a farm bill. And it's ridiculous. And actually, for you farmers out there, this is not a good farm bill. I was involved in sugar policy, the only thing that stood the test of time, but that's got, we're going to do a little segment on that, how rotten that's become as well here today, if I get a little time and my throat doesn't go. Looking at these numbers, but here's for the Iowa farmer in 2012, and I wanted to use 13, but unfortunately I think these guys in St. Paul, when the Iowa numbers, they sent me some bogus numbers, and so I want to make sure that we're showing you honest information coming from a direct source, namely your government. And of course, none of them like to do it. But here's what the Iowa corn and soybean farmer had. In their case, in 2012, they got $520 million in crop insurance subsidies, and their premium for their crop insurance, which amounted to about $15 billion worth of coverage, their crop insurance premium was $382 million. Yet their direct payment, people, was $475 million. So they were in a situation where they had a positive gain of $431 per acre. And so from back to the standpoint of a wage earner, your weekly wage, if you were in Iowa there using an acre as a weekly income, you'd get the equivalent of $688 per week. And if I did the math right, you'd have a $35,776 gross income for the year, and your whole situation on a weekly basis, you'd have $4.31 every week to go to McDonald's for lunch on. And your income would be guaranteed. If you're like that plant in Sartell out there that closed down, or a tornado hit your building, or your boss died, you were covered for the year. You had your revenue guaranteed. That's how this program works. And yet they want to put on like these poor farmers, we've got to take care of them. Are we taking care of you? Is MNsure going to subsidize your health insurance that far? They're subsidizing it too much. See, when we talk about this Obamacare, the Republicans are really incompetent in it. It's really not Obamacare, it's Obama Insurance. He's got in the insurance business, selling it at full retail with all the expenses, and people are going to like it. Why? Because we're going to make a massive subsidy of the premium. But nothing like we're doing for our farmers to get revenue insurance, to guarantee themselves a profit or cover all their expenses, or that little old lady that is suddenly driving a Cadillac, and what happened? Well, she's getting huge rent, and how does she get that huge rent? Well, the taxpayer through crop insurance is guaranteeing she's going to get that. And but on a national basis, we want you to think a little bit about some numbers here as well. In 2013, because of sequester cuts, let me back up. Let me go to 12 first on a national basis. The direct payments to our farmers on a national basis, we've been giving them about $7 billion worth of total subsidy premiums, or subsidies to reduce their premium, I should say. And the direct payments, because they're actually on the books, people, at about 5.1 billion. But why they're coming down, I would contend, there's so many farmers and landowners that traditionally got some of these payments up till just recently, but their incomes are suddenly so big that they don't qualify. There's a lot of people above $1 million adjusted gross income, and consequently these direct payments have come down. But this is nationally in 2012. These direct payments that come even on a time of mind-boggling good prices, almost $5 billion, 4.787 million, 4,787,000,000. Yet the premium for the Iowa corn and soybean farmer down there, or farmer in general, was $4,134,000. In other words, his out-of-pocket costs to pay the part that you, the taxpayer, didn't pay of his crop insurance premium was $14.62 per acre, but he got a check just before the premium was due, his portion of almost $17 an acre for a out-of-pocket gain of $2.31 per acre. So if you were that wage earner, you would end up with $2.31 per week extra. These numbers, people, should just make you boil. And when we've got a conference committee coming up, we should say, like Alan Repke has said for a long time, this insurance program, if you look at it, if these insurance agents, the local insurance agents, these insurance companies would have not gouged the system with high management fees and commission per acre and that thing, this thing would be so rock solid, actuarial sound that the government should have been out of it by now. And I had no business in it. In fact, it's an actuarial sound business, and the truth of the matter, let the marketplace work. These farmers are scattered out all over today, and let them buy their own insurance, or let them keep some grain in the bin and sell their average crop, and they'll be fine. It's just ridiculous. And the other thing I guess I wanted to hit on here before we run out of time is this. When the farmers would be saying, hey, this guy don't know anything about farming and so forth. Heck, I don't. And here's some interesting things on your Iowa farmer. In relating to you people out there, retired or are working class, we just got some numbers also as the stars aligned this week, and my computer is so full it's all but shutting down. Here's what the asset value of giving these Iowa farmers, we're using them as an example here, free insurance, is the fact that land values have just went up like this. I should do it like this, as most of you are well aware of. In 2000, and I got to go backwards on this chart because they didn't give the numbers. It's from Iowa State. All farmland, the good, the bad, and the ugly, so to speak, averaged in 2013, either in a Federal Reserve survey or Iowa State, I'm not sure what the numbers, the average in 2000 was $8,500 an acre, pasture, the whole works, what they consider farmland. Averaged $8,500 an acre. Southern Minnesota, $10,000 an acre. Northern Iowa, $12,000 an acre for the prime stuff is common cost today. But anyway, in 2013, this land was at $8,500 an acre. In 12, it averaged $7,000 an acre. In 11, it was almost $6,000. In 10, it was over $4,000. And 8 and 9, it was about 4,000 per acre average. So in just a very short period of time, land went from 4,000 to over 8,000. And since 13, 12, 11, 10, 9. Since 2009, people, has your house or your biggest value, has it doubled in value? No, it's went the other way. And yet we're providing these guys direct payments and free crop insurance, or highly subsidized crop insurance. And then, for example, in here, going back from 8 at $4,000 an acre, 8, 7, 6, 5, 4, back to 2004, the average land in Iowa was 2,000 an acre. So since 2004, people, the average value of Iowa farmland has went from 2,000 to 8,500 an acre. Yet these farm state congressmen and senators that you guys praise as heroes, I don't. I think you all should be thrown out, whether they're Democrat or Republican, can have that kind of gain, and plus just mind-boggling income in that process, and it's all fine and dandy. We need to take care of our farmers. And yet at the same time, the next segment I'm going to do on misguided sugar policy that's suddenly costing you hundreds of millions of dollars, again, to show you how incompetent it is. I also want to, for your Twin City guys, do you realize, now they can't do it this month because they got to pass a farm bill first to give this perk to farmers that they've been enjoying. We call it commodity loans. Historically have been the way to manage the inventory, if they were managed right, at least like we did with sugar. Here's the interesting numbers. They can harvest a crop and put it in a bin and take an inventory loan at 1.125%. Can any of you people out there, you people in the Twin Cities, or you wage earners, can you go in and borrow money against an inventory for 9 months at 1.125%? And then here's the interesting on storage facilities loan. You drive by and see these big grain bins. Some people in the city call them silos, but they're grain bins is what the farm term for it is. In October, you could get a 7-year loan for 2.25%. These guys with record income and all this could get a grain bin loan for 7-year term for 2.2%. They could get a grain bin loan at 2.875% for a 10-year term, and 12-year term at 3%. Just mind-boggling perks. And then when we get into the sugar deal, it relates to here. We're turning some table-ready sugar, refined sugar, people, into ethanol because of our mismanaged, incompetent ag state congressmen and senators that follow some of the dumbest things known to mankind, namely WTO. But I'll just give you a prep as we move in, take a break here and move into our next segment. Sugar farmers, these cooperatives, can take a 15-year sugar storage loan facility for 3.25%, in other words for prime, for 15 years. And yet we're allowing them to take table-ready sugar and dump it in and make ethanol out of it. Thanks for listening to Inform TV. I'm Ellen Repke, Alexandria, Minnesota.